Cool, we'll just wait a couple of seconds. Kia ora I te whanau. Ko tama nei ki te tautoko I tēnei kaupapa. Kore I mimiti ngā mihi tēnā tātou katoa. So kia ora, welcome to our session today on business recovery planning with we. Before we kick off, I'll just talk briefly about who we are so that you know who you're listening to today. So introduce yourself.
Yeah. Talofa, and welcome to everyone on our business recovery planning session today. My name's Ali. I'm one of the co-founders of We Accounting, and looking forward to working with you guys and delivering the session with you today.
Cool. And I'm Wendy, the other co-founder of We Accounting, and what we've found, especially through this time through COVID, things have been really tough for business owners, and pre or leading into lockdown and going through lockdown, we did a lot of work with businesses around business continuity planning, so planning for the unforeseen, and just in case something happens and we end up going through COVID again, but even just any other natural disaster or anything that might occur. So we did quite a lot of work with businesses while we were inside lockdown. But now we come out of lockdown and people are going back to sort of something similar to business as usual, which we know that's not really business as usual. And so now we're talking about business recovery and how we can leverage off what we've learned from COVID, and how we can pivot our businesses and be able to maximize our opportunities going forward, because there's definitely a lot of opportunities. So while COVID has brought about some not so good things, there are definitely some good things inside of that too.
Cool.
Yeah, so today we're going to be talking about that. So if you are watching us live today, please do feel free to post any questions that you've got. We're going to save the questions till the end and we'll answer them at the end. So any questions that you've got along the way, please do pop them into the comments box. We'd also really love to know that you're there and where you're from. So if you'd like to say hello to us, in English, Māori, Samoan, Tongan, whatever language that you would like, then please do say hello to us and let us know where you're from, and we'd be happy to give you a bit of a shout out at the end too. So before we kick off, we'll start off with a karakia. So me noi tātou. Whakataka te hau ki te uri, whakataka te hau ki te tonga, kia mākini kina ki uta, kia mātaratara ki tai, he ia ki ana ki atukura, he tio, he huka, he hohu, tihei, mauri ora. Cool. Alrighty. So yes, business recovery planning for post-COVID or post-lockdown, and leveraging your business, looking at how you need to pivot. And so today we're going to be going through with that. We've got templates around that, and then we're going to tell you a little bit about how we can help you out as well. So I'm Wendy and this is Ali. We're both from We Accounting. We're the co-founders of We Accounting. We Accounting's been around for the last 9 years. We'll be celebrating our 9th year open in Grey Lynn next month. So exciting. Cool. So let's kick off. I'm going to turn me off and I'm going to turn on my screen. Make skillful sailors, and we know that over the last couple of months it's definitely not been smooth sailing for businesses. In fact, it's been pretty stormy, but it's through these storms that we build stronger businesses, and we've seen this already with many businesses that we work with. So these are good times to grow your business and to find the leaks in your boat, if we say, and to fix the patches, so that we can continue to move forward in a much stronger boat. And it's also a really good time for us to be talking about who is rowing the boat, who's setting the sails, who's navigating, and just making sure that everybody that is part of your waka are moving in the right direction, that they're sitting in the right seats. And like I said, this is a perfect opportunity to be doing that. So before we get stuck in, I just want to throw out this disclaimer. You know, accountants, we're very good at our little disclaimers that are on the bottom of our financial statements. But, you know, we just want to say, look, we're not an insolvency specialist here. There are very strict rules and regulations around solvency, some of which have been amended to account for the impacts of COVID-19. However, if your business is unable to continue to trade as a result of solvency or bank finance issues, then no, that's not really the things that we do. However, we can refer you to someone that's suitably more qualified. So yeah, so this is our agenda. We're going to talk about closing the disconnect. We're going to talk about the need to reinvent. We'll go through just quickly some stuff around your budget, so personal budget and your business budget, and we're going to be talking about also opportunities and the vulnerabilities and your critical challenges in your business. We'll discuss identifying and managing risks, your goal setting and actions, pulling everything together so that it comes together as a complete package, which would be basically your business recovery plan. And then we'll talk about your next steps and how we can support you, and then we'll answer any questions. So again, please do ask any questions at the Q&A down the bottom of your screen. Just pop the questions in there, and at the end of our session today, we'll answer those for you. So before I get started, I just wanted to share some thoughts about how we can stay better connected at this time. And I'm not talking about Zoe's, I'm not talking about technology or the webinars that we're doing for you. I'm coming from the perspective of how we can work together more effectively now and in the future, where your expertise can be combined with ours to create outcomes that wouldn't be possible by working alone. So in our view, it's never been more important to create and connect with a team of people who can help you at this time. So I'm talking about people like your bankers, your legal and HR advisors. You know, they've been under the pump just as much as us, your accountants. So, you know, the bankers, your HR and legal advisors, your accountants, your bookkeepers, you know, building really good relationships with those types of people so that together we can come up with a far better plan. So at We, like I was sort of saying before, you know, our core purpose at We is to change the dismal statistics for Māori and Pacifica people, and small business failure plays a part in this. And this is the reason why we're running these types of webinars. We really want to be able to help you, and this really is just the beginning of how we can work better together. So I do urge you, if you don't already have a pen or in a paper, or if you don't have a place to be able to type up notes, please do grab them, because we are covering a lot of information today and I don't want you to miss out on any of it. And while we will edit this video and post it up on our website, and you know, you'll be able to have access to it, anything that you can start doing straight away has got to be good for your business. So do make lots of notes, and please do not be shy about asking questions. So let's go. Cool. So during times of adversity, we're often forced to think outside the square, to reinvent the way we work or behave. And we see four main opportunities for you to reinvent your business. The first opportunity is to innovate. And so innovation is about introducing new things, new ideas, or new ways of doing something. So a great example that we've seen during COVID-19 pandemic is one of our clients, Captain Crates, who stepped away from focusing on brick and mortar and started to look at creating new products. And so what they've done is they've created a whole new product, and they now sell it online. And this came about with the realization that they needed to become more essential, that they wanted to get growth faster, and they didn't want to have the huge capital outlay. So, you know, when you buy brick and mortar, when you even lease brick and mortar, so we're talking about you know, buildings, you know, the cost to fit out, especially for people who are in the food industry, is quite high. And obviously they were all shut down during lockdown, and, you know, but supermarkets were still open. And so when we spoke to Captain Crates, we were like, how can you get into supermarkets? How can you make sure that if everything is in lockdown, you are still essential, that people are still buying you? And this is what they came up with. So an example for you might be introducing a new product line or a new service. The second way to reinvent is to re-engineer. So to re-engineer is to change and improve the design of a product or a system. So in other words, use what you've already got to produce something completely different. And one example of re-engineering is a New Zealand beer company that took their plant, they looked at what their plant was doing and what they could make, and they went from producing beer to creating their own hand sanitizer. Now, when we're talking about this, we're not talking about the good old thinking that, you know, like in the US, they thought that they could drink disinfectant to cure coronavirus. We're not talking about that, but, you know, it's a whole different change in the way that they did things. So another example of re-engineering, which is a little bit more closer to home, is the accounting industry. So accountants have re-engineered into more business advisory, which is much more needed over this time. So, you know, and we've been saying it for years, you know, that knowing your taxes and paying your, you know, doing tax returns is not actually going to help a small business to thrive. But it's the information that we know, it's the understanding of the numbers, it's finding ways to change the numbers or rejig the numbers to make the numbers better work for you. It's about these sorts of things, having conversations with our customers about how you reinvent, how you re-engineer. And so that's something that we've seen that's been happening, particularly in the accounting industry as well. The third way to reinvent your business is to adapt or change the way you deliver products or services. So remember the biological definition of adaptation, which is the process by which a species becomes fitted to its environment. So in other words, if we take the new normal or a new environment that we find ourselves in, how can we change to suit that environment better? A great example is a local beauty therapy business that emailed their client base offering a free online skin consultation if they buy a product, as well as new bundles of products, so including full-size product and multiple samples, marketed as the home facial. If only you could do home haircuts, which you can, which we did sort of see too, but maybe not quite the same. But you know, so that business was unable to offer beauty therapy in a traditional way, and so during lockdown, they needed to find ways to adapt to an online solution. And the doctors did the same. They started doing online consultations. And like we said before, you know, around brick and mortar, we've had clients that have closed down brick and mortar and they are now selling online. So we know that we can reinvent in 4 ways. We've got innovation, we've got re-engineering, we've got adaptation, and now we've got number 4, which is to widen your lane. So what we mean by widening your lane is to broaden your product or your service offering. So for example, the cafe who broadens their offering from purely cabinet food and coffee to include ready-made meals, boxed sweet treats, to selling wholesale ingredients and even ingredient bundles with recipes so that people can make their own signature treats at home.
So I was watching this show, right, as a side around this reinvention, and I think it was a cooking show with one of those British chefs, and they went out to this beer making factory, and what they did was, because you know when you make beer, there's always hops that get left out. And so instead of just throwing it away, what they did was they re-engineered it and made it into flour, which they actually used. And so that way they actually fully utilizing those hops. So not just going to waste, but actually using it for another product, which they can on sell. So yeah, it's pretty wicked.
It's smart.
Yeah, it was smart.
It's a whole new product line from waste.
Yeah.
Basically.
Yeah, so I thought I'd just throw that out. It was interesting.
Oh, thanks for sharing. So anyway, with these 4 ideas in mind, so your innovation, re-engineering, adaptation, or broadening your offering, you know, what could you do in your business? You know, have a think about how you might change your business or what you might do around reinvention for you and your business. And basically, this is what business recovery planning is all about. I'm going to let Ali talk about budgets.
So I guess so this is the part of the webinar that I do know well. So I guess there's a natural order in which way to reinvent your business. So I guess with business continuity planning, we ask you to put the oxygen mask on yourself first. Business recovery planning is no difference. So remembering that your business is there to serve you, not the other way around. So you shouldn't be a slave to your business. So I guess the first step is, as a shareholder or owner, you should define what you need to get from your business. Can you make savings in your personal spending to help reduce the cash flow on the business? Mm-hmm. So if you're anything like some of the businesses that we've been working with, I'm sure everyone during this lockdown period would have saved quite a bit of money because you couldn't really have spent much because nothing was open. So you would have made your business a bit more leaner. You would have cut and reduced some costs. Some would have been forced on you. But can we keep continuing these savings? So I guess the first thing that you should be looking at is updating your personal budget. So an exercise that we do with our clients, and we've done with our friends as well, is to go for your bank statements. Some people do 1 month, but I prefer to do a full 3 months where you just outline every expense that you've done, that you've spent through, and you just go through and itemize. You'll be surprised at what you'll find you've spent your money on. And I've done this with quite a few clients, and they couldn't believe how much they could save by just cutting down on a few things.
Namely Uber Eats.
Uber Eats, the local pub. and if you go through and do that simple exercise, you can find you'll save a lot of money. Of course, you need to be realistic too, as lockdown was very different. We're not all just staying at home doing nothing or doing work. So it was very limited. So, make sure you go back 3 to 4 months to review your expenses. Don't go to last month's bank statement, because you would find that, hey, I didn't really spend that much. But go to before COVID started, before you start on those. So once you've done your personal budget, you can help build up your revised business budget. And that's what we always say, find out what you need personally from your business so that you can add it to your business budget. So many of you would have already done your business budget for the year, but obviously this is going to change. So, like everyone else in business, COVID has done a massive change to us. So, we'll, not just us, but a lot of our businesses have gone back to rejig their budget. So we recommend that what we call a bottom-up process, where you start with the increase in cash you want to achieve for the year. It's important to start here, as many businesses have found they didn't have quite enough war chest of cash to go into the lockdown. And as you can see right now, a lot of businesses are falling down because they just didn't have that cash flow to sustain them over this period. So this isn't designed to be technical accounting, so we'll try to keep it as simple as possible. But we just want to show how you can take control back by going through a high-level, step-by-step process. So if we follow the
bottom-up approach,
if we follow the bottom-up approach, we can start from the other cash movements. You may be able to free up cash in your business by reducing debtors. So there's a lot of businesses out there that's got quite a few debtors in their books. So debtors are people who owe you money. You've got stock or work in progress level. So you might have a piece of work that needs to be done. Complete that so you can bring in that cash. And you can even go to your suppliers that you've been buying goods or services off, and see if you can negotiate your terms better. And so you need to also allow for principal payments on existing and any new finance. So maybe from here you could actually go to your banks and see what they can do around maybe a loan holiday for some of you for that holiday to help free up some of that cash.
Remembering that a loan holiday still needs to be paid, and it does extend your loan term, and it does actually cost you more in the long run. But if you're struggling at the moment and you need to get by, then it is an option that is out there for you at the moment.
Yeah, it's definitely there, but just remember that you do still have to pay that back in the long run. So asset purchase or sales, there might be some assets that are just sitting there, not doing anything for you. Isn't this about the time to have a look if you can sell it to bring in that extra cash flow? Drawings. So this is where you add in your personal budget from the previous slide. So like we were saying in the previous slide around your personal savings, your personal budget, how much money do you need to take out of the business? Could you have dropped that down as well to help save the money keep more of the money in the business. Your net profit after tax, so after adding or subtracting these items, gives you the target profit after tax that you need. So we are working from a bottom-up process. So once you've done the net profit after tax, then add in what the tax you will have to pay to get that tax. Then have a careful look at your overheads to see if savings can be made. So overheads are your fixed costs. So no matter if you have no sales or you've got hundreds of millions of dollars of sales, these are the fixed costs you're going to have to pay. So see if there's savings that can be made. So as Wendy mentioned before, a lot of there's a few businesses that we're looking after that have gotten rid of their lease. So it might be an opportunity to see if your business can move in that direction, or maybe just cut down on the amount of space that you do need. So we were speaking to a few people from KPMG, and they mentioned that they have a big building, but they've actually cut down on the floors that they were using. So it's another way to cut down on your overheads. And so number 8, now I'll go through your gross profit and see what it is that you need. So you're using your desired gross profit percentage, you can actually derive the sales level you require for your business. And then it's all about reviewing these numbers and margins to ensure you can come up with a workable revised budget. And ideally from here, you'll then complete a more detailed forecast on a month-by-month basis, so you have a basis from which to track your progress.
And for all of those non-accountants out there who have no idea, then basically you come and see us and we help you do it.
Try to keep it as simple as possible.
That was definitely not accountants, which is good.
And this is where having real-time digital reports of your numbers is so important. For example, if you identified your sales total for the year needed to be, say, 500K, which equates to, say, 10,500 per week, if your business is open for 48 weeks per year, you want to have a system for recording how you're going against that target. Likewise, if you have debtor terms of, say, 7 days, and your debtors are currently taking 41 days to pay you on average, you want to measure if that number is improving. So this is really key with your debtors. Yes, you've done the work, but now you've got 7 days, but they're ballooning up to 41. So it's really important to get on top of those debtors, because the slower you get your money in, the harder it is for you to survive. We strongly recommend you measure no more than 5 of your most important numbers. So we usually call these the key performance indicators, your KPIs. Some examples are daily or weekly sales, your gross profit by product or service, debtor days, as we just mentioned, or increase or decrease in cash for the month. And once you have those KPIs and the budget, it's important to have these numbers loaded into your monthly reporting system so you can actually track your results to the budget. And we can help with the most appropriate technology to use for your business. So what we've got on the spreadsheet right now is the financial reporting software that we're using, Fathom. So it's really good to give you a visual perspective of what your business is doing, as well as on your KPIs.
Cool. So once you know at a high level what your budget is, it's time to look at the opportunities that exist to achieve that budget. So again, we recommend focusing on no more than 5 key opportunities. So think of the ideas that we talked about earlier around reinventing your business. So opportunities could be things like working in more of an online way with your teams or your customers. You may no longer need the same premises, or you may be required to redefine the roles inside your business. There may be new lines of revenue to pursue or other businesses to acquire. The opportunities might be around the adoption of technology or systems to improve your efficiency or online communication. So take the time to brainstorm all the opportunities to improve your business. It's a really valuable and empowering exercise. We do it a lot with inside the Accelerator program, and when we get into the Midi Honor program, when we're coaching clients, we talk a lot about this and come up with lots of different opportunities. And we've had quite a few of our businesses really pick up on opportunities through COVID. So while COVID is very stressful and there are definitely challenges, there are definitely opportunities. Yeah, and so, you know, don't leave any stone unturned here. And sometimes it's really cool to bring in other people who are maybe new to your business, or, you know, who think a little bit more outside the box. And I think that's probably one of the great things about We Accounting, is that we've got a really good mix of people who know and understand accounting, and then also knowing business, and then we've got ideas people who think outside the box. So yeah, no reason why you can't bring those types of people in to help you brainstorm too. And then, of course, the flip side to opportunity is vulnerabilities. So what are the big 5 vulnerabilities in your business right now? So they might be things like poor cash flow, which a lot of businesses are suffering from at the moment. It might be a sustained downturn in demand for current products or services. Might be poor debtor management, so that's collecting in your debts, the money that people owe you. Or it might be bank covenants not being met. So naming the vulnerabilities enables you to be able to make a plan to overcome them. So name them so you contain them is a great mindset to have. So you need to be brutally honest in your assessment of vulnerabilities. A rosy plan for your financiers is not going to pass muster in these difficult times. It also is just not going to help you to be able to find ways to be able to overcome them. So, you know, you need to be able to know these, because then you can start mitigating for them. Once you've identified the 5 biggest opportunities and the 5 vulnerabilities, you need to identify your 2 to 3 most critical challenges. So these are the big things that you really are going to have to do something about. These might be things like deciding whether or not to sell or to liquidate part of your business, or establishing an online sales platform, or securing sufficient finance to trade through the next 3 months. So we strongly recommend that you do a careful analysis of all risks in your business. The best way to do this is to complete a risk register, which assesses the likelihood of each risk and then consequences for your business if that risk is not mitigated. And so risks fall into the following 10 categories. Lost my little cursor. There it is. So the first one is governance. So governance risks include poor planning, lack of up-to-date policy, poor discipline around working on the business. And we see a lot of business owners, you know, especially sole trader businesses, you are stuck trying to do everything, and it does become quite difficult. And there are definitely hats inside the business that end up not being met. So by hats, I mean different roles inside the business that just aren't taken care of. There's leadership, so risks around communication, around reporting, and around team morale. And team morale, obviously, we've seen a lot of that through COVID, where you've not been able to get together, everyone's working remotely. So, you know, how do you manage those sorts of risks? Products or service risks, so risks around lack of adaptation or innovation. And, you know, I say that, you know, now is not the time to keep doing what you've always done. Because if you keep doing what you've always done, like the saying goes, well, the saying goes, you know, you'll get what you've always gotten. But actually, you're not going to. You're going to get far less, because there are businesses out there that are innovating and adapting, and it's those ones that are going to push forward and are going to thrive. They're going to maximize the opportunities in the time, and those people who don't adapt and don't innovate are potentially going to struggle. There's operational risks, so risks around suppliers and supply chain, contractors, key customers. So the fact that it's harder to get stuff through our borders at the moment. We had clients that couldn't sell product because they couldn't get stuff in to be able to make product.
The couriers, you know, we had that issue with the couriers not being able to deliver on their goods as soon as we moved to level 3.
Dumping them on the side of the road.
Yeah. This guy's another one with operational risk, you know, not being able to deliver a product because there's no product to deliver. So, yeah.
Marketing risks, so risks including poor return on investment or overspending, lack of digital presence, which is huge at the moment. Everyone's online, everybody is pushing and selling in a digital space, and yeah, so it's about now making sure that you have that digital space. It's like the new norm. It's like you're already too late if you're not there, almost type thing with your digital marketing. So sales, the need to adapt to e-commerce. or online selling, risks around poor training or overselling in these difficult times. So we saw when we first went into COVID, people were berating other people because how dare you sell in these times. And I don't think it was actually that they were selling, it was probably just the way that it was being done. But yeah, there's definitely some risks around sales. Finance, so undercapitalization, a lack of sufficient cash flow, poor financing structure, poor credit control, your debtor management. So again, like, getting your money in and not being able to report properly and having a lack of forecasting. So a lot of the businesses we worked with over the COVID weeks, they were looking at their finances and their forecasting every day, every week, and really knowing and understanding exactly where they were. And when you do that, then you can plan better. You know exactly the decisions that you need to make. So yeah, it's such an important thing and definitely a huge risk. HR, hiring too many people, overstaffing, overspending, poorly managed restructuring, huge thing at the moment because lots of people weren't really aware of the HR rules and people were getting laid off, but weren't being done properly, not really understanding how to use the wage subsidy and all of those sorts of things. There's definitely risks in there. And then obviously if you don't do things right, then there's the, personal grievances that might come from it. Admin, lack of automation. The faster you can get things done, if you can automate things so that you're not having to handle it as often, it just reduces human error, but it also increases your staff's time to be able to do the things that are most important. And then technology, so poor adaptation of software or apps, and that's something that We Accounting has been really big on lately, is just bringing in the right software and the right apps. And so we've got a really cool team that can help you to do that as well, but really understanding the risks involved with that. Also, once you've identified the risks, then you need to pull together everything into a cohesive plan. And then you need to have some goals, you need to have some actions and some responsibilities. So your business recovery plan is much more detailed than your normal business plan, in that you get right down to the detail for each department of the business. Your goals must be SMART goals. Now, I have a thing around the word SMART. If you've been in any of my coaching sessions, you know that I have a problem with realistic, because I think reality is in the eye of the beholder. But however, you need to have some time frames around it. It needs to be measurable. There needs to be a sense of reality to it. So if you have a really good plan that outlines it, then it becomes a reality. And all the actions need to be assigned to somebody. So you can't just throw up a goal in the air and then just hope that somebody is going to do it. It needs to have a time frame. Somebody has to be responsible for it. Someone needs to be held accountable. These goals and actions should be updated regularly through some form of regular review process. And at this time, we'd recommend probably doing it monthly for at least the next 6 months, especially with how things are going at the moment. And then you can change it to quarterly after that.
Yeah, it's really important, especially with the changes that are going in the world economy at the moment. So doing a monthly review by
Okay, so let's take a look at how you pull all of this together as a package. We've talked a lot about a lot of things already so far. So depending on your circumstances, what you should have in your package would be your personal budget. So like what Ali was talking about, go through your statements, download it, and understand how much money it is that you need to be bringing in every month. Your risk register, so those things that we went through and going through all of the risks. Your business recovery plan, and then you need to have your business forecast. So if you don't know how to do that, we did a webinar on that not long ago, and it's on our website. You can go in and watch that. You need to have an updated organizational chart. So if you've got a team of people, what does that look like? And if you don't, then you don't really need to worry about an organization chart, because you are everything. And this is really important if you're applying for finance too. They'll want to know this. And you might have a finance application. So if you are looking for funding to be able to help you to get through, then you might have a finance application too. Now, you might not need all of this stuff at the same time. So, if you've got sufficient cash flow at the moment, you may not need to apply for finance. Likewise, if you don't have a team, like I said before, then you won't need the organizational chart. but what's important is that you just establish what's right for you. So anything that you do need, make sure that you've got it. So it could be any combination of those things. Okay, so we're going to run through what your plan might look like.
So the executive summary, it just really details in a short blurb what the whole plan is about. So obviously this is a mock executive summary up there. Then we've got pull down to the numbers that the business owners has. So now you've got your monthly spending and it makes it to annual. What's the role of the owner and how many hours they work? Then you come down to your budget and break-even analysis. So this is just a high-level view of it. You've got your revenue here of 1.36 million for the year, a gross profit of 344,000, percentage of GP 25%, your total overheads 226, net profit 118, and your tax 33,000. So with your budget, you do it on an annual basis, and then obviously you'll have each quarter that you will be you'll break this down evenly. Actually, it doesn't have to be even. You can actually manage how that quarter, if you're a seasonal business, you might have the first 2 quarters might be higher sales and third and fourth quarter might be smaller. So if you have that sort of seasonal approach, then what you could do is look at when you're at low season and what other services that you could do. We talked about earlier that you could help to alleviate that drop in income. You've got your critical KPIs to be achieved. So we mentioned 5. We've got debtor days, your stock days less than 45. So debtor days, try to collect it earlier than 45 days. 7-day turnaround. There's no worries about that. There's been word on the from the government that they're trying to push. If you've got invoices that are outstanding from the government, apparently the government is saying they will pay early. So really push for that. You've got your GP percentage there, minimum weekly sales. So it's really important, especially in this environment, that you try to track that stuff on a weekly basis. If you've only been doing it monthly, try doing it on a weekly, and just board meetings held monthly.
Yeah, so those are really just the KPIs that are, as an example. You may not have those ones in particular. You might have ones that are completely different, but you'll pick whatever is best suited to you, depending upon what it is that you're trying to do, what's inside your plan. And then, what I talked about is what are the opportunities that you've got in your business, what are the vulnerabilities you've got in your business, and the most critical challenges that you need to overcome. And then we talked a little bit about breaking up the risk and going through each of the different areas of your business. So these are just the ones that we say are important. There's the 3 of them. We've got more on the next slide. So then you put down the risks and then you set some goals against that. And so we break it all down. So you've got annual goals and you break that down to 90-day goals and you break that down to 90-day actions. And then again, what's probably the most important thing on here, not really, but it is very important, is who's going to do it and when is it going to be done by. So often we see these goals and there's no who's going to do by when. So yeah, so those are the first 3. And then again, same thing again, these are just the other departments that are inside the organization. And so this will all basically make up your business recovery plan. Yeah, business recovery plan. Cool. So that's been quite a lot. Hopefully it hasn't been too overwhelming for you, and we've tried to not use too much technical detail here, but basically what we wanted to do is just share with you what business recovery planning is all about and how to do it. So what are the next steps from here? I mean, I say this at every single one of these things that I do. Doing nothing is not an option. We said right at the beginning of COVID that sticking your head in the sand is not an option. That's not what we need to be doing this time. It's a period of business that is not normal. And so doing what you've always done, like I said, is actually going to give you less results as opposed to giving you the same results. Remember to put your own oxygen mask on first. Because you want to make sure that your business is sustainable. And if you can make it sustainable right now, then it's going to be better for you. It's going to be better for any of the staff that you employ. It's going to be better for your communities. So make a plan to get through these challenging times. focus on what it is that you can do as opposed to worrying about what might happen in the future. And just remember that we are here for you, so please do reach out to us. You know, being part of these sessions is definitely going to help you in your business. So how can we help you further? So our recommended strategy is to complete a business recovery plan. We've received a lot of great feedback about this already, and in all honesty, actually, I already was doing recovery planning very similarly to this pre us going into level 3. So I had businesses that were already planning before they opened up for how they were going to recover and what they were going to do, and we saw some really awesome results. And in fact, they had some of the best weeks that they'd had in the whole year. Now, I know lots of people were spending, but the thing was that they were ready for it and they went out gunning, and they're still reaping the rewards of that. So if you haven't done your plan yet, now is the time to do it. It will be a really great foundation from which you can build your business, your cash flow improvement strategy. And, you know, if you are looking at loans or anything like that, then this is going to be a really good start. Okay, so what are the options? So you can meet with us online, because we're only doing online meetings still, and we can go through this with you together. We can do it as a one-on-one session. It'll take about 4 hours, so we can do it either in one 4-hour slot, or we can break it up into 2 2-hour sessions. And how that works is we'll send you an in-depth pre-work to complete, so that you've got time to consider the impact that COVID-19 has had on each of the departments of your business, and then we'll use that pre-work to guide us through the plan and help you set some goals for each of the departments of your organisation. So this ensures that you've got a really detailed, well thought out plan to give your business the best chance of recovery. Second option is to meet with us to do what we've just talked about, so do your business recovery planning session, but then what we'll also do is help you to prepare an updated cash flow forecast. So if you haven't been doing this, this is a great opportunity to be able to do that. And if you need to, we can also help you with any finance applications. The third option is a complimentary business recovery review. So we can send you the business recovery action list to complete, which is a condensed version of the plan. And this option will suit you if you've got like a small business that doesn't really require a comprehensive business recovery plan. Once you've completed the action list, we'll schedule a 15-minute call to review your plan and talk through what the next steps are. So the risk with this approach is that with everything else going on right now, you may not get around to doing the work. And sometimes that's what happens. But again, it is an option, and it's a free option for you. And if you're unsure on the best way forward, or you want to talk to us about how we can work together, then we recommend a complimentary meeting to discuss your goals, any current problems and challenges that you're facing, and we can then agree to the best way that we can support you. And again, that's a free session. So if you're going to need to obtain business funding, we believe that it's vital that you prepare a cash flow forecast, and you know, the loan needs to be repaid, so your business needs to be able to generate enough profit to be able to convert that cash to make the repayments. We know that it's probably going to be quite difficult to commit to spending money right now. We have different payment options available. We don't want cost to be a barrier, and we also are part of the RBP network, which is the Regional Business Partners Network. In Auckland, it's done through ATEED. So if you are wanting to have these sessions and you're thinking that even actually if it's a finance isn't an option still, you know, let's see if we can get some funding for you through the RBP network. We help you with the application, and that potentially could make these for free, so you won't have to pay anything if you are approved. If you're in the Pacific Islands, we're part of Business Link Pacific, which we can also get funding to help pay for these sorts of this sort of support. So yeah, do reach out to us if you want to. We're happy to see what we can do to be able to help you. And ultimately, how much you pay us is going to be paid back to you in dividends through the growth that you're going to have, through the money savings that you're going to be able to have, and just the sustainability of your business. So yeah, we didn't really actually get any questions, but we thought that we would just pop on so you could see our faces and just see, yeah, if there was any questions that anybody has got that maybe we can answer for you. Or if you're watching this as a replay, then yeah, please do feel free to pop in your questions, and we can come back and have a look and answer any questions that you've got for you. So yeah, so there's lots of different options, as we said. We do have partnerships with different organisations. You do have to go through an application, so it doesn't mean that you're necessarily going to get approved the funding, but there are options there across lots of different places. The ones that we've already spoken about, we've also got other partnerships elsewhere too that we can also tap into. So we don't want you to miss out on any opportunity because of a financial situation at the moment. So yeah, so that's pretty much us today, and I haven't seen any questions, but like I said, if you've got any other questions, please do feel free to pop them through. Hopefully that has been helpful to you, but what will probably be most helpful, like we were saying, is if you actually have some time to sit down with us and go through a proper business recovery plan, and then we can help you to leverage your business forward faster and help you get through this time. Do you have anything else to add?
No, this is the time not to be sitting down. It's a time now to act. I know a lot of businesses are finding it really hard, so it's a real good opportunity to, if not speaking to us, go to speak to your accountants and really get to understand your numbers and where you are going in the next 3 to 6 to 12 months.
Cool, so we'll just finish up then with a quick karakia to close up. So, me noi tātou. Kia tātou katoa te atu whai o tō tātou ariki ai kurai te me te ahurua o te atua me te whiwhinga tahitanga ki te wairua tapu. Ake, amene. Cool, all right. Mātua whanau. We'll see you at the next session, probably next week. Actually, before I go, we are part of the Talanoa Tuesday, which will be up on our website. Nova will pop that up on our website again too, and we are so that's on Tuesday evening, so they'll be talking to us, and we'll be sharing a bit more about our story and answering some questions around business. So if you want to be part of that, then just have a look on our Facebook page, and there's some more details on there. So yeah, mātua.